Okay, what we're going to do for this last segment is actually do some problems inside Connect. So you can, I always think some of the students seem to think they may have understood the material, but then when they get into the Connect, it's maybe they aren't getting it as well as they thought. They don't understand how the system's laid out. So that's kind of what our whole goal here for this last piece. What we're going to usually do in these sections is we're going to come down. Now, again, remember this module 1 for the first one that's due, these are all just pretty generic. These are just, you kind of watch a little video segment and then you answer a question about it. It's how the program is laid out. There's not really a lot of accounting material in this. They use some accounting words, so you got to know some of the things. But what we're going to come down now is down into chapter 1. And we're going to go through this optional practice. So if you don't have it set up, you can at least follow along and see how things are put in. But what I would do is I would go ahead and put in your access code that you would have gotten from the bookstore, or you can buy it right on here. And as the immediate option, if you don't have that, then you can do that. When you sign in, there's down at the bottom, it'll say something like 14-day free access, temporary access, and I would do that. Now mine's gonna look a little different than yours. So I have to go in here to the student assignment view. And then it still may look a little bit different than yours, but it'll be pretty close. And these are typically set up as algorithms, which means all of our numbers are going to be a little bit different, but it's going to be the same setup. So instead of like cash being, for mine, it may be $100, and on yours, it may be 120, but it's still, everything's going to lay out the same. It's just the numbers may add up differently. That's what kind of the algorithm means. All right, so let's get into this. And usually on some of these, what they'll do is they'll give you a video to watch, perhaps, on how to do something. Maybe that's more on the practice ones. But to get started here, I think you hopefully will find these pretty simple. So I'm on the first one. Your first one should look pretty similar to this in this, again, the optional items. And these are going to be very similar to the homework ones. So it's good for us to go through. What we're going to do is just fill in this simple math equation. And this is, remember, the basic accounting equation, the left side assets, and it's got to equal these two. So this should be really easy. Go ahead and fill these in for you. It shouldn't take you more than about 1 or 2 minutes. I'm going to do it on mine. Your numbers, I can't guarantee that they're going to be the same. I don't think they will, but I don't know. I don't see all of yours. But for this first one, when it's looking for the assets, well, 20,000 plus 40,000 or 45 on mine, this has to be, absolutely has to be 65,000. Otherwise, the equation won't work. And then on anything but the homework, you can usually click up here to check my work. And it says, yep, we're doing good. All right, let's return back to the question. 100,000 for the assets equals 34 plus something. So all we've got to do is the simple math and say, okay, 100 minus the 34,000 is what? That has to be what the equity is. 66,000. And we do the same thing over here. It's just the other number is missing. 154 minus 40,000 and 14,000. Check my work. Boom, we got all check marks. So this first one should be really easy, the first set. It's making sure your equation balances, because that's really important in accounting. Now this one, you think, oh, they don't give us nearly as many numbers. Well, that's okay. We can still do this one. We can start filling it in. because down here it's just totals down here at the bottom. So really they are giving us the same amount of numbers. If I have beginning assets of 300 equals something plus my equity of 100, on my example, this one has to be 200,000 because 200 plus 100 is going to equal 300. And then it says, okay, throughout the year, I gained an extra 80,000 in assets. I gained an extra 50,000 in liabilities. So that means how much equity did I have to gain? And at least on mine, it doesn't allow me to, oh yeah, it does. It allows me to fill it in here. Oh, not 30. Has to, because 50 plus 30 has to equal 80. And then all you got to do down here at the bottom is just simply add up. Your beginning plus your change says we have 380,000. We have 250,000 of liabilities. And then equity, 130. And then these down here will, of course, balance as well. 250 plus 130. You add those up. Yep, that equals a 380. Always check your work to make sure. Again, you do the check work on a lot of the problems except the final homework problem. This one is a two-part problem. Again, they've kind of given us quite a few of these. We should be pretty good at these by now. 123,000 in assets minus 40,000 and 47,000 liabilities says the equity has to be 76,000. And then these two are linked, so that means part four, number 4 goes along with it. All right, so with this one just, I guess it doesn't necessarily go right along with it. Oh, it would. With this one, we've got to just fill in some blanks. And you can see that they don't give us enough for the beginning. I don't know what my assets and equity are when I only have one number. But they give us ways around that. They give us these two down here, and then we can solve what the beginning number is for assets. They're saying at the end we had 190. Throughout the year we gained 60,000. So what does that mean we started with? Well, if you do the math, you take the 190 where you ended up with minus the 60 that you gained throughout the year. That means we started with 130,000. Now we can start filling in the equity by doing just the equation. 70 plus, if you can do that in your head, 60,000 equals 130. And then, they're giving us a little bit harder one here. They're saying our liabilities actually went down this year. So if our assets went up 60, our liabilities actually went down 5. That means for this to equal negative 5,000 plus what gives me 60? This has to be positive 65,000. 65 plus negative 5 is 60. Now we can just do the additions here. 70 plus negative 5 is 65. 60 plus 65, 125. You can check my work to make sure I've added everything. Looks good. Now, sometimes on ones that require you to put in a formula or a ratio, you can easily go to the ebook. That's one way to do it. Or you can just do a simple Google search, which is a way that you can find some of your answers. So we'll do that on this one just to show you. I go into Google, it says here, what is Swiss Group's, the key here is return on assets. We think, okay, what's return on assets? If I don't want to go through the ebook or I'm having trouble finding it in the ebook, I can just go to return on assets, put in the formula, and boom, here it is. Net income divided by your average total assets. Now you might think, ooh, average. How do I get the average assets? Well, that's what we're going to do now. Okay. So the numerator, let's go back. The numerator was your net income. So let's see if that is an option. Yep, here it is, net income. Denominator, remember our denominator was average total assets. And boom, here we go, average total assets equals return on assets. Now we just need to put in the amounts. So we look up here to get the amounts. Net income, well, it gives us our net income. It says net income was 40,000. So put in 40. And then our average total assets. To get the average, you actually kind of got to do a little bit of math off to the side. They don't give us the place to do it here, so we've got to just put in the final answer. We'll make sure that that's how they want it, but when we check our work. But how you get average is you simply take your beginning assets plus your ending assets, you add them together, and then you divide it by 2. That's your average. So it's like saying if I have a 5-foot person and a 6-foot person, and I want to know what the average is, if I put those two together, get 11 feet, and then divide it by 2, that'd be 5.5 feet. So that's what we're doing here. So it says at the beginning we had 200,000. At the end we had 300,000. So I think most of us can do that in our head, the average, 250,000. And then it just calculated it for us. What the return on assets are, 16%. Basically what that's saying is for every $1 that I put into my assets, so if I put in $1 and buy something like a new piece of equipment, for every $1, I'm going to get back 16% or 16 cents for that year. So then you've got to decide, is 16 cents on the dollar good? Because if you're going to have it for a long time, then it is good. If you're only going to have it for 1 year, then maybe it's not so good. So we can do check my work. And everything looks good. Okay, now our final couple questions here deal with the financial statements. All right, let's look at what they've given us. It says the owner contributed $84,000 in exchange for common stock in the business. So this is a brand new company. It just started up on October 3rd. And then these are the balances on October 31. So these were all zeros at the beginning of the month. And you can see here's that 84,000. And then it's spread out through different ways. And we've got some new, you can see we've got, he looks like he's a consulting firm. He's got consulting revenue, just like if it was like a doctor's office or a lawyer's office. Think of this as like as your trial balance. It's just not laid out and all in one big long thing. It's put into two things. That's fine. You're going to see that the trial balance is the better way to do it. But these are just all of our accounts, and they actually were nice enough to put them in kind of the equation order for us. Notice here the first items are everything over here is all of our assets, cash all the way down to the equipment. And then we only have one liability. We have two owner's equity, the stock and the dividends. And then we have our revenue and then all of our expenses. With that, we should be able to begin to prepare the 3 financial statements that we've done. Plus, at the very end, we're going to do the last one, the statement of cash flows, which is a little bit tougher. And we're going to get way more detail into it at the end of the semester, but we're going to look at the bare bones one today. All right, so the income statement, remember that first thing? We always have the company name, what it is we're working on, and then as of October 31, or whatever the year is. So that's what we're going to pick here, as of October 31. Okay, now we come here. Let's see what the first drop down is. All right, remember what the first category. Remember, it's revenue. We start off with our revenue account in our income statement. That's the top. That's kind of our heading. And then it says, okay, well, what revenues could go in here? Notice they give us a whole bunch of, they gave us 3 options. Well, if we look back up here at the problem, we only need 1, consulting revenue. So the rest of them, we're just going to leave blank. So we go to consulting revenue, find it in the drop down of alphabetical order, and then put in the amount, 14,000. Then notice it we put that in the subtotal column, and it brings it down here and adds it for us into the total. So I don't have these written out. I think you can print these out. Yeah, you can print these if you want, but we've got to mentally, for at least now, put a little X here that we've done the revenue. If it helps, print it out, and then you can manually put an X there on the consulting revenue. Well, that's the only revenue we have. We're ready for the next piece, the expenses. So we come to my drop down, go to the expenses, and then we start listing them. All right, let's just put them in the order that they have them. You don't necessarily have to on the expenses, but I think that's going to be best for us. So let's do rent. $3,500, $3,550 on mine. Yours, all your amounts will probably be just a little different. Salaries, 7,000 on mine. Telephone and miscellaneous are our last 2. And for those last few blanks, we just leave them blank because we don't have any more expenses. Now this company's doing okay, maybe not great, but at least our revenues are more than our expenses. Now we're ready for that final line. Revenues minus expenses. If you look back to your notes, remember that equals your net income. And they give us 2 options here, net income or net loss. It's only a loss when your expenses are more than your revenue. So in this case, they're not, which is good. At least on my example, maybe on yours it is different. But we can just do the math here, 14,000 minus 11,890. And we get 2110. We can check our work. Everything looks good. All right, so now we've done the income statement. All of these, consulting, rent, salaries, they all have exits. They're done. Now, the one thing that you need to jot down on a side sheet or just keep it in your calculator like I have, let's pull back up my calculator. This was our net income. Remember on the statement of retained earnings, we use the net income. If we go back to my, I don't know if I have it up right. But anyway, when we do our statement of retained earnings, remember I got to use my net income as part of my statement of retained earnings. So I'm going to need to remember this 2110. That's one of my connecting figures. All right, so the first thing we do here is our date. And then the statement of retained earnings, hopefully if you have these, you've written these out, what it looks like. Remember the first thing is your, on this one, we don't have any opening retained earnings. So our retained earnings starts out as 0 because it's a brand new company. With a brand new company, you haven't earned anything yet, so it's just 0. Okay, then we add in our net income. So that's our connecting piece now. This is where we put in that 2110. And then we subtract out our dividends. Come up here and we see the dividends for 2000. That doesn't leave us much money left to go into retained earnings. We only made 2110, we took out 2000. So that tells us then our ending retained earnings at the end of the month is just the difference. It's the 2110 that we earned in income minus what we took out. So we're down to $110. That's the new number that I want to remember. This 110, that's going to be our connecting piece into the balance sheet. We can go ahead and check our work. Looks good. Now we're ready for the balance sheet. This one, for most things, you don't use as of, but in this one, they still use the as of, but they just take out the month ended because they're saying at October 31 only, not just for the month. So that's the difference between the balance sheet and the other two. The balance sheet is looking at it just not for the month, but for the entire life of the business. Okay, and just by looks of things, it looks like they don't break it down like we did in our problem with current and non-current. So we're just going to have regular good old assets and then list them all. Remember, that's what our balance sheet is. We have our assets and we list them all, and then we list our liabilities and then our owner's equity. Okay, so let's go through and list our assets. We've got 1, 2, 3, 4. We got 5 assets that we need to put in here. So let's go ahead and do that. Got cash. That's our first one. $11,360. Next one, we've got the accounts receivable. Office supplies is our third one. And then our last two are long-term ones, land and office equipment. We don't want to put anything in these last two because we're all out of assets. So we're going to leave those blank. And then this is simply our total assets. Okay, now we're ready for the other side, like we did in my example, how I had it on two sides. You don't have to do that, but on this one, they do it just like that. So now we're ready for our liabilities. And we only have one. The accounts payable, what I owe somebody, $8,500. Don't put anything in the second one. Except I guess we could put, let's see what they give us as drop down. If they give us total liabilities. No, they don't. So we don't need to put anything there. Now here we're ready to start a new category. We're all out of, so on this one, what they're not totaling up your liabilities. They're going to do that all at the bottom. I usually like to total your liabilities, but that's not how this problem is set up. Now we're ready for our two equity items. So we've got X's by, we've used the dividends, we've used all of the revenue and expenses, we've used all of these. The only thing we haven't used, there's two things, the common stock and then our connecting figure. Remember that retained earnings ending 110 that I have saved out here? Those are our last two items we're gonna put in. So let's go ahead and put in our common stock. That was the 84,000. And then our retained earnings at the end of the year. And we don't, it was 0, but now it's at 110. I guess the reason they didn't add up and give total liabilities was because we only had one. Here they are giving us a total equity, so we want to go ahead and fill that in. Total owner's equity is the 84,110. And then this number, remember that check figure? It's our liabilities plus our equity. And boom, total liabilities and equity. Check our work. Everything looks great. Now, we're ready for the final statement, the statement of cash flows. This one is a little bit tougher. With this one, they have to tell us some things. What we're trying to do with the statement of cash flows, I'm going to briefly go back to my notes, and I'll put these notes up if we think we need them. But basically, when we look at any of the numbers, I want to be able to figure out where is my cash going and coming from? How am I getting cash? Where is it going? And just to give you an example, you could think, oh, well, you look at the income statement. That's going to tell you where your cash is coming and going. Yes, in a way, it's a good starting point. Because this is just me giving a real brief little example. I have the income statement here that I made up. And then off to the side, I tell us, looking at the balance sheet, what the cash is. And the income statement says, oh, we've made $1,000 this month. But the cash says, hey, well, I got 5,000. Where's that extra 4 coming from? Well, the income statement doesn't always tell the whole story. I could have bought some equipment. If I buy equipment, that doesn't go as an expense. That's money that I'm paying out, perhaps if I paid it, but it doesn't show up here as equipment expense because it goes as an asset. Remember, it's not a something that I'm just going to use this first year. Or maybe I received money on an account receivable. I had an account receivable for $7,000 and the guy paid it off. And that doesn't show up here on the income statement that he paid off his bill. So there are reasons why cash can change that doesn't show up on the income statement. And that's the whole thing we're going to be doing here, is figuring out why did my cash change, but my net income says, we go back, remember that net income was 2110, but yet my cash is 11,000. Somewhere there's a disconnect there. There's a difference. Why? Why is there such a difference? Well, we're going to go through it now and figure it out. All right. So whenever you do and by no means did I give a very good overview of the statement of cash flows. I'm just trying to keep it quick and dry for this one. When we get in later in the semester, we're going to go into a lot more detail. All right, the statement of cash flows is set up, same kind of opening figures here, with, or I should say here, the same opening title. And the statement of cash flows is broken into 3 categories: operating, investing, and financing. The operating, that deals with just your current assets and your current liabilities. And it does have a few other things, but we're going to get into those much later in the semester. But your cash flows from operating, it always starts out with your net income, because that's a good starting point. It doesn't tell the whole story, but it tells some of it. So we're going to come here and we're going to come down and find, let's see here, cash. Well, they should give us net income, but they don't. We may have to actually find it. All right, let's look at before we get started here, we should always look at more of all the directions. And that's probably why they told us about not to use net income. I like to do it differently than how they're doing it here. That's fine. It says the account payable balance. This is what's made up of the account payables. The supplies that we purchased, not all of that was in cash. So if we go back up here to the supplies, right here, the 3250, well, actually all of it was on account. We didn't pay any money. The 5250 in employee salaries have yet to be paid, so we have paid some. The rent are all paid in cash. No cash has been collected on the consulting fees. Oh, okay. So we haven't gotten any money yet, cash-wise. So we're not going to put in here cash received from, we could put it as 0, but that's silly. We don't have to put any 0 items. So what, instead of, this program is having us, instead of just doing net income, it's saying, nah, don't do that. It's saying, look at our account receivable. It's 14,000 and our revenue is 14. They kind of balance each other out. We didn't receive any cash. But the first thing it does say here, let's start looking at our rent. Our rent, telephone, and miscellaneouses were all paid. So our rent expense is $35.50. I need to show that I actually paid money for that. Cold hard cash left my hands. So I'm going to put that cash paid for rent. And then I put how much? It was $35.50. Let's do the other two. Telephone. Cash paid for telephone, $760. The last one, cash paid for miscellaneous. Now we still have a couple other items where cash was paid. Because we look at and we think the rent, we haven't done anything with the, no, we did do the rent. The only thing we haven't done are these two. The salaries, it says 5250 have yet to be paid. Well, the salaries are more than that. Your numbers are going to be a little different, but all we got to do is take the difference. It says we've accrued 7,000 of salaries, but this much of that 7 hasn't been paid. So we just do the difference. 7,000 minus the 5250 says, okay, 1,750 have been paid. So that's somewhere that cash is going. And I'm sorry, I forgot to put in these minus signs. 35, it says here cash outflows need to be indicated with a minus sign. I neglected to do that. So let's put those in right now. Now, cash paid for salaries. And remember, we'd done that. I did the math over here. 1,750. The office supplies, I didn't pay any money for those yet. It says the office supplies were completely 3,250 hasn't been paid, and I only have 3,250, so there's nothing to do there. So if I had this printed off, I would now mark out C and D. Both of those items are done. And I would also over here mark out my revenue. All of my revenue was not cash, so I don't need to put that into my statement of cash flows. Basically, I'm trying to figure out where's cash coming and going. Right now, cash is only going. So my revenue was all put into my receivables. I'm ready to go ahead and total up my cash from operating. And on this one, it says net cash, don't put provided when it's a negative. When it's a negative, we want to use cash used by operating, and you do provided when it's a plus. So I have used cash to pay for all of those items, and I haven't gotten any money yet. Now the investing, let's look at the investing. The investing are our long-term assets. Just remember, the investing are the long-term assets, and I have that in my notes that I can put out for you. I have the 3 sections. So down here at the bottom, we've got the operating, and now we're in the investing, all of our long-term assets. It tells us, all right, land, that all came from the owner for the stock. So I didn't have anything in land. I didn't pay any money to get the land. It says for the equipment, the owner paid $18,000 in cash, and that's all we have in the equipment is 18. So everything we have in equipment, we actually paid money for. Okay, so I need to notate that. If I paid money for it, then I need to show that. Cash paid for office equipment, $18,000. That's all that. So the land, 46, that was all taken care of, not cash. So I don't need to put it in there. I can mark that out. I can mark out B because I've now done the office equipment. I've shown where the office equipment, how we got it. It was by cash. So we're ready to do the total. And that is again a used because it's a negative. So cash used from investing. And now the financing. Basically, financing is everything else. Long-term liabilities and any owner's equity items like dividends or capital. All right, so let's look. Do we have any long-term items? And the answer is no. All we had is this current asset. We did increase our owner's equity and we got money. We got $38,000 in cash. So I need to put that. Cash investments. We got $38,000 in cash. That's what it told us up here in my initial item here. Anytime cash is involved, I have to notate it. So A is all done. We've done everything for A. B was done. C we did. D yep, we've done everything except now the cash dividends. This is the only thing we haven't done. Cash dividends paid of $2,000. So cash dividends to shareholders. And it was paid, so that's money leaving the store or leaving our business. Now, since this is a positive number, we're gonna opt for the net cash provided by financing. Okay, we've done the 3 sections. We're ready to tie it all up into kind of like the balance sheet, how we'd have a check to see if everything worked out, to see if our assets equals our liabilities and owner's equity. That was our check. We're gonna do a check here. What we do is the first thing, we have 3 lines of check. Our first line is how much change did I have throughout the year? So we're gonna look here, did we have an increase or a decrease in cash? Well, I know it was an increase because my positive outweighs all my negatives. So let's go ahead and do that. We had 36,000 as a positive, minus 18,000, minus 6640. So I had an increase of cash of 11,360. Our cash balance at the beginning of the year, remember the beginning of the year, we just started, we had nothing. So it was 0. So our cash change plus our beginning cash says our ending cash should be 11,360. So we need to go up to my cash amount and see if it is in fact 11,360. And look, it is, it's 11,360. I've explained where all of that cash came from. And you can see most of it came from the investment. It didn't come from any of the stuff that I did throughout the month because I didn't get any money. None of my clients paid me, but I did pay money for some things. I paid money for equipment, paid a little bit of money to my shareholders. And now finally I can check my work. Now this statement of cash flows, it's by far the hardest one of the 4. We didn't get into a lot of detail into it. It's too early to start doing that. But if you take this video and then as you're going through the statement of cash flows, you could kind of have a double screen set up and I think you'll be able to do the statement of cash flows on your homework now. Okay, again, my Zoom isn't working at the moment. I'm gonna have to re-download it. It's not working in that I can't hear you. It comes out as garbled for whatever reason. You can hear me, but I can't hear you. It's unfortunate. So I'm gonna be doing that later today. And then hopefully when we come back for a regular class on Wednesday, By Wednesday, hopefully I've heard from other students in the class who maybe work and can't make the mornings. We'll either continue to do the mornings and then they can just watch the recordings, or if there is a better time, if you decide, 8:30 is a little too early, let's make it 9:30. That's fine, we can do that. Or you say, let's do it at 3 o'clock in the afternoon. Well, we can do that as long as most people agree. But for now, we're going to keep it at 8:30 for today and Wednesday. And then we'll have I'll try to send out a poll if there's enough going one way or the other. All right, so remember what we have due. The first one for Friday is simply just getting used to the material, getting used to the software. So there's not a lot of accounting work. What I would do is, before you forget most of this, is go into then chapter 1. It's not due until next Monday, but go ahead and get started and get going and get ahead of the schedule. Because on Wednesday, we're going to start looking at actually module 2 stuff. Chapter 2, we're going to start doing some journal entries and T accounts. All right, I can't really take questions unless they're in writing because I can't hear you until I get this downloaded. But send me an email and we can meet back up on Zoom once I get this either later today or tomorrow. I'll be glad to meet with you or anytime this week. All right, with that, we will end it and I will see you guys hopefully on Wednesday.